No, it's dangerous to say that this time it's different with regards to the rotation, but let's also realize that this rotation was occurring before the announcement of the vaccine. All you had to do was look at the industrials and materials to give you that clue. Now there's a very fundamental reason to support the continuing rotation into the cyclicals, into the industrials, even into the financials, which have been left for dead but are coming back. And it's just as simple as there is a path to normalcy ahead of us. Here's the one qualification I want to make. If you're looking at yesterday's rallying and saying, oh, shucks, I missed it, relax, calm down, because unfortunately there is terrible news coming on the virus. Scott, I know you've been all over it. I don't need to tell you that. But, you know, the numbers, the really bad numbers about deaths lag the case count by about a month, which means at the end of this year, it's just going to be awful. And that's going to depress the economy, not depress as in depression, but it's going to hurt economic growth, and it's going to give you an opportunity to get into this rotation, which is one you need to be playing for the next years, plural. You're going to have an economic recovery on the back of a vaccine and treatment. Cyclicals are where you want to be.
All right. So Microsoft, Apple, Amazon, Facebook, they're all lower today. Zoom, Peloton, DocuSign, all sharply lower today. Many of those other so-called stay-at-home stocks are lower as well. Cramer, Tiffany says, prepare for a multi-day sell-off. They were ripe for profit-taking, he says. Yet, I find it so interesting that you bought more Peloton today. Why not wait for more of a pullback that Cramer says is still to come?
Well, listen, with all due respect to Cramer, I like to make my own determination of when to buy. But why Peloton? First, because Beyonce, right? So just when I think, just when I thought the great news from yesterday on this kind of glimmer of a vaccine and kind of like this path forward was a great thing, I wake up this morning and Beyonce has struck a deal with Peloton. So I love all of those things. And so, this whole conversation about value and are we, in this kind of like rotation, I think it's been really hard to have a conversation around value this year because we've had so many companies kind of emerging with these superstar, with the superstar performance. And so, I really do think we're still in a stock pickers environment, and we have to be very careful about painting, large sectors with a broad brush. So I really do believe that, you have to. I find myself. Even with like companies like Apple, right, and Peloton, asking myself not if I can afford to be in them, but if I can afford not to be.
Yeah. I mean, look, Peloton was lower. It obviously has reversed and reversed sharply. And maybe for some of the reasons, Tiffany, that you laid out. Pete, what about these names? Is this transition going to last? Is it time to get out? With all due respect to Tiff and the nice move that we're seeing and the reversal we're seeing in Peloton today, Pete, is it time to get out of some of these names?
They certainly, we've talked for a long time, Scott, about how lofty some of these names are. And when you look at Zoom, when you look at Peloton, when you go across and you look at all of these various names that have been those incredible outperformers, we've had great performance from quality names as well, where when I say quality, what I mean is their balance sheets look really great. And we're talking about companies where you look at the multiple and it's far more something that's appealing, I think. But then you look at these other ones and you've had such an incredible run to the upside. If indeed we are at the point where we are now looking over across the mountaintops and we're able to see a little something, which I kind of feel we're getting there, Scott, with this vaccine and the possibilities of a second vaccine and so forth, I think that I think some of these names will suffer, and those are the names that I'd avoid. That doesn't mean every single name in the NASDAQ is a sell. I do think there are the quality names out there that will continue to produce to the upside. Now, let's not forget either. Just a day or so ago, we're talking about the NASDAQ at 12,000. I know we pulled off of that, but we were at 12,000. So we have been on this unbelievable run to the upside. 11,000 was an area that everybody was looking towards. We broke through that. We got to 12,000, and now here we are pulling back, of course. And I know there's pressure on the NASDAQ again today, but I don't think this is the time to panic. I think there are names that probably, because of the PE levels, are sells. And it's been a great ride for those who've actually caught it. But I also think that there are quality names out there that still have plenty of upside. Apple, Microsoft, a lot of those various names, Facebook. I go down the list.
Some of those names, Pete, the ones that I mentioned were down earlier, like in Apple. It's important to note that stock has reversed. Apple's now in the green ahead of that event that's coming up later today that we just heard about from John Fort, which he thinks is rather significant. So, yes, there is money that's going into these names, thinking that those trends that were in place are not going to end anytime soon. So, Michael Farr, nice to see you again. What are you thinking about the market coming off this big day that we had yesterday, maybe not for the NASDAQ, but for the Dow, setting its first record since February, and where stocks could go from here? What are you telling your clients today?
You know, I guess you have to tell them to stay calm, because it's wonderful to feel this euphoria that we kind of felt yesterday and maybe over the past week, depending on which side of the aisle you're on. But when stock prices are going higher, you certainly can feel that euphoria. I don't really think it's a rotation, Scott, number one. I think that tech sector has a life of its own, and as it has gone up, it also pulls back at various times. But I see a broadening of the market. I see the value stocks and a lot of the industrials catching a bid. I think that's probably going to extend to financials at some point as this recovery continues. So there are opportunities out there. But I think it's a big mistake to suggest that the FANGs and the tech stocks are over with and the money's going to come rushing out. Fundamentals for most of those companies are still very strong. You know, last Wednesday, the day after the election, the FANG stocks and Microsoft picked up $385 billion in market cap in one day, in the Wednesday after the election. So that doesn't sound like a group that's dead to me yet. I like Tiffany being a bit opportunistic for some of the names. That makes sense to me. I think you have to be patient and know that as we get through this and we get a reopening of the economy, we move back into that 2% GDP growth world, and you're going to want to own these companies that are absolutely able to execute, continue to expand market share, and earn more to the bottom line.